Hi guys, Brown Asset Management here, and today I'm looking at the Realty Income Corp, ticker symbol O, using my 7 steps. Let's have a look at the stock price over the last 2 years. You can see that before the pandemic it was actually around about $84 a share, then got hammered in March, went down to around 40 and has rebounded but hasn't crossed around $65. So looking at the short term, if it can get to its pre-pandemic high, that is a massive growth from $65 to $80. Now let's have a look at my 7 steps. The market cap of Realty Income is $24 billion, and let's have a look at step 1. Is the P ratio less than the market? No, it's not. It has a very high P ratio of 57.5, so it is not less than the market, which is 40, and it's not less than the sector, which is 30, so those are 2 fails off the bat. Is the revenue increasing? And these values are all from 2017 to today, and it has gone from 1.2 billion to 1.6 billion, so that is a pass. Has the profit increased? Yes, it has. 320 million to just under 400 million, so that's a pass again. And are they buying back their shares? No, they're not. It's gone from 273 million to just under 350 million. But as this is a REIT, I think that you should take this with a grain of salt and not be too worried about these shares outstanding increasing, and even the PE ratio as well. Are the current assets greater than the current liabilities? Yes, 1.3 billion to 400 billion, but not greater than the total liabilities, which are just under 10 billion. And finally, is the free cash flow increasing? Yes, it is. It's gone from just around 900 million to over 1.1 billion. So that is a pass. So that is 4 passes and 3 fails for Realty Income. Looking at the free cash flow yield, I take the enterprise value, which is the market cap plus cash and cash equivalents minus total debt, and it has a enterprise value of 24.4 billion, which means it has a free cash flow yield of 4.57% and a free cash flow ratio of 21.89. So these are very good numbers. Now let's go on to the reason why a lot of you guys are here, and it is because this pays a monthly dividend. It has a dividend date which will be paid on the 15th of April. Which is in 3 days from the time of this recording, so enjoy your dividend then, and has an annual dividend of $2.82 a share with a dividend yield of 4.32, so that is really good. It has a 3-year dividend growth of 10%, and these payout ratios are very high, but because it's a REIT, they have to have very high payout ratios, so don't be worried by this. And it has a dividend growth of the last 27 years, so it is definitely increasing the dividend. It's a safe dividend regardless of what these numbers say, and it is paid monthly. So if you buy your shares of Realty Income this month, you will then get paid a tasty dividend in May. So this is why a lot of people like this. So do analysts think this is a buy? And analysts have it as a moderate buy with a 5% on the upside with $68.60 a share. Even on the low side it is 62, which would only be a small decrease at the end of the year. So analysts are at the end of these 12 months, so analysts are very bullish on the stock. It has a high price of $80 a share, which would put it around the price it was pre-pandemic crash. So analysts are saying it is a buy. And just having a look at Simply Wall Street, they have it at fair value at $107 a share, which means it's 40% undervalued, which means that they're actually expecting it in these next 12 months to break through their original pre-pandemic price. So Simply Wall Street is very bullish on the stock. Just before I head over to my valuation, can you please give this video a like? Can you give a comment on your thoughts on Realty Income? Are you interested in this monthly dividend stock? And now let's have a look at my valuations. So I'm using discounted free cash flow and a buffer Graham intrinsic value, and very interesting results here. You can see the cash flows are not completely out of the ordinary here. 1.1 billion, 1.2 billion, definitely within the ranges, and it gives a calculated stock price of $164 a share, which is a 150% discount. So free cash flow says it's a buy. And buffer Graham intrinsic value, this actually has it as a fair value of $35 a share and a Graham price of 26. So very differing values here from the two models. I think this is more to do with the discounted free cash flow and buffer Graham intrinsic value not being able to handle the REITs correctly. Because of the amount of money it has as free cash flow relative to its size, it looks like a very good buy. I think this is maybe putting these numbers a little out of whack. So models say it's a buy. Discount free cash flow says it's a buy, buffer Graham says it's not, but I think this goes back to, do you think this company, which pays a monthly dividend, will it grow to $80? You can get some good appreciation on the share price there, or do you think that you're just happy with the dividend and you can keep reinvesting. So in terms of REITs, it's the biggest one. It's the one I seem to like from just what I've seen here today, and I do think I will be purchasing this. So I'm going to quickly have a look at some technicals here, but I don't think this is a stock that a lot of people will be trading like this. Just because it is a REIT, there's probably better opportunities out there. But if we look, we have a 50-day in blue, a 200-day in gold, and the price with the candlesticks. So if we're looking to more recent numbers, you can see that there has been a lot of action around both of these. Both the lines have come pretty close together, but the price has broken through. We have a golden cross here where the shorter day has crossed back through the 200-day, and the price with it breaking through as well. So in the short term, very bullish signals here. It is looking like a buy due to the technicals. And just looking at a parallel channel here over the last year, you can see that this is kind of the highest it's been, and it has hit the lowest and hasn't really broke below this channel here. So it does look like it's on the upswing. If it does hit around $61 in the next couple of months, I'd say that would be a buy, as this would be on the low end. And if it gets anywhere up to $70 and $80 a share, then I would say that's a sell because it's on the high side. But if you bought it now and got till 80, that's great. If it goes up to $80 in the next couple of months, then it is a sound investment. I would think maybe wait for slightly longer returns and longer time frame. But according to parallel channel, it is trading within here, so definitely take a look at this if you do want to buy it based on the technicals. Right guys, thank you all for watching. This video is a little certain. Thank you all for watching. Just want to apologize for not getting out 2 videos last week. I have just moved into a new house, so I have a million and one things to do. I'm going to try and keeping these videos out as possible, get these videos out as soon as possible to keep bringing you guys as much value as possible. And please consider subscribing if you enjoy investing in stock analysis videos, and I'll catch you guys next time.